Welcome to the StockManor.com studios here in the Black Hills of South Dakota. I'm your StockManor Brian Johnson, making professional trading simple. And we had a down day. Yes, I did say a down day in the markets. It was a decent down day, down 1%, which is pretty good actually overall. But the Dow only ended up down about 100 points. So, in the bigger picture, that's a good move. We'll take it, especially if you're bearish. That's fine. But it's not a huge move. It's not 200 300 points, which is what you usually expect on one of those wow type of days. But down nonetheless. So this was a good chance for either the bulls to take a break and or the bears to take over. We don't know where that's going yet, but we do know that at least we're getting some sort of a pullback in the markets. Something I talked about this weekend, that it might wait a couple days before it finally does drop, and it did. It took a couple days, so that was not outside of what we had predicted over the weekend. Looking at the Dow on a 60-minute, you can see though that we came right back into this support down here at the 200 and the 50 period moving averages here on the 60 minutes. So are we below it? Yes. Did we get below 10,300? Yes. Those were some of the levels I was certainly watching to break. Now, can it hold? Will it hold there? The Bears really need to kind of hold on to this area down here and not give it back up quite so soon. Especially coming into tomorrow. I'd like to see this thing finish down again. Ultimately, getting now down below this 10,200. That'll get us below these moving averages and below this lower channel line we were watching. So that's our next step, one piece at a time. 10,200, next level to watch for on the Dow. Here we have it. We got up above the 50-day moving average for a couple days, 3 days about there, and then today we're not able to hold. So this potential high base we were putting in was a failed formation. We have now fallen back down. As soon as we got below this level, that was my okay to go short for the day mark. And actually, I had already been short from up a little bit further, so it wasn't that big of a deal. But it was nice to at least see some dividends start to pay off with those short positions. As you can see, we have this one down day today. Looking for this 10,200, that's the bigger area. If you're swing trading, this 10,183 is huge too. That's your 20-day moving average. So once again, we're looking for some follow through here. Let's see if we can get a good deep push on the markets now that the Bears have decided to at least step in for a day and see if we can get some real confirmation to this. That will be the next step for us to watch and see if we can actually put in some really hard selling over the next couple days. The NASDAQ on the 60, you can see it finally giving way and breaking down. It's starting to kind of give me a little bit of a an impulse wave, if you would, formation that has not been completed quite yet. So this could still be maybe an ABC type of a completion, but sure looks like this is more of an impulse wave to the downside, which is good. That's what you want if you're bearish. We did get below all of these moving averages, below the 20, below the 50, below the 200, below this lower channel line. So with this having broken a lot of this support, especially below that 1800 area, which we're about to look at on the daily, I would tend to believe that the other indices will follow soon enough and do this exact same thing. So now, resting right on 1790, that is the next mark in the NDX. From a daily standpoint, though, like to see it get down below this 1800 mark here. It was a pretty strong area of support. We broke it and closed below it. Now I'm looking for, yes, confirmation. Like to see another day or so of that. Get down below the 1790, 1780 would be great. That clears this 200-day moving average on the NDX. And we'll see if we can get some follow through by the bears. NDX on a weekly Tuesday, but right back to the 20-week moving average at 17. Can't quite see it, but it looks like 1780. So watching that 20-week moving average to see if we can close that, get below that. SPX on a 60-minute. Okay, here we go. Coming down, this also looks like the beginnings of a very nice impulse wave to the downside. However, at this point, it still could also be a little ABC correction. C is just a little extended in this case. But this looks more like a 1, 2, 3 that we're working on here. Maybe this is a 4 or 5. We don't know yet. Still way, way, way too early to tell. But I'll tell you what I do like. Love that we got below and closed below 1100. That gets us below all of these moving averages here. And now we're back into this channel. And if the NASDAQ is a leading indicator, which I tend to like it, tend to think of it as a leading indicator, we should see this eventually break these levels down here. Once again to the downside, now that we have broken 1100, we're looking for 1100 to hold if there's a retest of it. And we're keeping our eyes on 1085, 1080, then 1075 to the downside. Those are the more major areas on the way down to watch on the SPX. From a daily standpoint, you can see same thing up and above the 50, kind of closing on around the 50 and then falling down today. Coming right back into this 1085 area, which is going to coincide with the 20-day moving average. So that is why 1085 and you know, let's not forget that it was huge support resistance back here. So 1085, then 1080, then 1075, still my levels to be watching, both on the 60-minute and on the daily. Looking for some follow through here by the bears. If we can get some strong push red candle down, which I told you is what I'm looking for. I'm not just looking for these little teeny tiny white candles or little teeny tiny red candles. I want big red candles. I want to see these. If you're bearish, this is what you're looking for. Right now, that would play very well for me. I'm very short the market, so it'd be great to see this thing push down a little bit further and ultimately break a lot of these lower levels. From a weekly standpoint, it's only Tuesday, so we're not going to worry too much about it. VIX getting a little bit of a pop up here, so I shouldn't say a little bit, 7.5%. That's a little bit more than a little bit. But very nice to see that the VIX is coming back up. That helps confirm the price action we saw today. So I love to see this. Back up here to its 50-period moving average. It is what it is, but that just tells me that there is a little bit more fear coming back into the markets. We'll see if it actually ends up going anywhere as we proceed further. From a weekly standpoint, this right now, if it closed, would be a bullish reversal, potential reversal candle, but we still got the rest of the week to go. So hard to start looking at weeklies on Tuesday. Apple on a 60-minute. Yeah, this is